I was asked by one of my clients to simplify some of the terminologies for buying and selling real estate. What I'm going to do is I'm going to spend 30 days covering 30 terms you should be familiar with if you are thinking of buying or selling real estate. The first step for a buyer is to know your budget. And to know your budget, you need to go and get your mortgage approval. You need to know what you will be approved for so that you can go shopping for homes. Who is going to approve you? Well, you can go through a financial institution like a big bank or a credit union, or you can go through a mortgage broker, which is our word for today. A mortgage broker is that intermediary between the borrower, which would be yourself if you're planning on buying real estate, and the lender, which is typically a big bank or a credit union, but they can also be alternative lenders, B lenders, private lenders, that sort of thing. So a mortgage broker is in between. Think of them as the matchmaker. So they're going to take your unique situation, all your records for employment, your assets, liabilities, and they're going to match them up to the best suited lender for you. In contrast, if you go directly to a bank, let's say you go to the Royal Bank or TD or any of the big banks, and you go and apply, it's that bank that will be lending you the money. So you don't have a matchmaker in between, you're going directly to them. And that bank is either going to approve you or not approve you. If they don't approve you, the relationship is over. If they do approve you, you're married for the length of that mortgage. I always recommend that my clients use a mortgage broker because they do the best shopping, and often they can find you deals. For example, they can cover some of the fees that a bank would charge you. And the best part is you typically wouldn't pay for a mortgage broker. They work off commission, and the banks or credit unions pay them once your loan is approved and you have found that property and purchased it. Now, if you're a little bit harder to get a loan for, then you may have to go with an alternative lender. In those, there's typically fees associated. Or if you're buying commercial property, typically there will be a fee that you need to pay your broker. But if you're just doing a straight-on mortgage with any of the big banks or a credit union, then the broker will be paid by them, not by you, and they will work really, really hard to make sure they find the right lender for you so that they can be paid. If you found this helpful, or you know this may be helpful for somebody, please forward on and watch the other terms I'll be posting in the coming days. For more bite-sized content, follow and watch my other videos.